Hello, good afternoon. Good afternoon. So today's webinar is going to be one very good one, and as you can see, the title is "How to Trade at the Correct Time." So my problem normally has been you can know that we are going to go up, we're going to go down with this. You don't know exactly when do you start trading. So entering trades is one thing, exiting trade is another thing. All of them you need to have a good strategy that explains the two. So if you have a chart like this, maybe your strategy says you're supposed to trade breakout. Example of this one. When exactly you're supposed to buy this thing. So the example I'm going to use here is breakout. I'm going to explain precisely how you use breakouts to enter trades correctly. So one thing, for proceed as I say normally, risk management is everything, which means even with the best strategy, the only strategy that remains true is risk management. Amount of money you are willing to risk in any trade. Just remember that when you have money in your account and you've not entered any trade, your money is still intact. No one interferes with it. So if you have, assuming I'm having this amount, this is a demo account. Having this is the trade we took some few days ago. Assuming you have something like this, you have a trade running, have some money here. This money is intact till you enter a trade. Not entered any trade, money remains. So how you enter trade is very important. You must understand precisely and how it trades properly. As I've said, I'm going to use breakout to explain how I enter trades correctly. So first we want to say what is breakout first of all. Breakout, as the name suggests, when you have a level, price breaks either above or below that level and then sustains that breakout. That is what's known as a breakout. So if you have a level like this, you call this a resistance. If you have a resistance like this and the price keeps coming to this level but does not above, then it continues down, comes back close above, continues down, comes back to the same place. Then at some point in the future, instead of continuing downwards, it actually goes and breaks above. The act of breaking above a level, it is this that we refer to as the breakout. It's what is known as the breakout. One big candle which opens below this level and closes above this level is called the breakout candle. So when this happens, when are you supposed to enter trades correctly? If you find yourself entering trades here, most probably you're a latecomer. Not you're an early end. You enter early. You're not supposed to enter when price is here. You're supposed to wait for price to come back to this level. That is, if you want to enter trades correctly, wait for retracement up to where the price was coming back up to, where the price could not break above. Then when the price hits this level, you're supposed to pick a buy with precision, expecting that buy to go. So this should be the correct place to buy from. Somewhere here. This should be the correct place to buy from. So the moment when price was using this level as a resistance, you actually were marking it as a resistance. So a retracement and moved down, came back as a resistance, continued down, it came back, have this as a resistance, then there's a clean break above. So price has to come back to this level here, because when price is somewhere in between from this point to this point, anyone who enters here enters early. And if you wait for price to break above this high for you to enter, it may look like it's less risky, but then you have to wait for price to come back to this level before you can buy it again. So this is precise. This is how you're supposed to enter breakouts. You don't just enter when price finds itself above a level. When price goes above a level, wait first of all. Wait for price to retrace back to the same place that's just broken. Then if you see buy signal around this zone, a buy signal could be something like this, could be a candle that looks like this. This is a buy candle. If after retracement to a level, then you see this, you see candle having a long tail, something like this. This is a very good sign that we are heading to the upper side. So price retraces back, comes back to this level, and then you see a candle like this. Then the next candle most probably ends up being like this. It's green. Next candle should be something like this. If you see something like this around the level where you expected price to retrace up to, then this gives you the chance to enter trades with precision. It actually confirms for you that we are now upward. So this is a very good pattern. If you see something like this, when there was a level here, you are marking this as a resistance, as a resistance, as a resistance, and then all of a sudden the price ascends above that level, traces back, and then cannot break below. Instead, it gives us these candles that look like pin bar. This gives you the confirmation that you're supposed to buy to the upper side. So this is one way. This is one very good way of entry. If you have a level, then price goes above it. Wait for something like this. So this is forwards I'm looking at. If you see something like this on the weekly chart that price has gone above a level, just retrace back the same level, scale down to a lesser time frame, maybe 1 hour, 15 minutes or 30 minutes. Look for a formation like this. That still will give you the correct place to actually pick a buy from. Now that should be very much straightforward. That you have a level, assuming you see something like the level which I've mentioned above on the weekly chart, not enter trade right away on the weekly chart. Scale down to a lesser time frame, maybe 1 hour, 15 minutes, or even 5 minutes. Then look for a similar breakout on a lesser time frame. Be able to pick a very good buy entry. So the best place to have your stop loss, as you can see, when breakouts occur, any breakout that is genuine, one candle normally opens below and closes above, something like this. This is the candle which actually triggered this breakout. You see something like this and it has a tail. Have your stop loss below that candle which triggered the breakout somewhere here. This is the correct place. If you successfully manage to buy it around after these candles, stop loss must be below the candle which triggered this breakout. If that candle is small, that is, if it is small so that you fear that your stop loss may be taken out, the best place is here to have your stop loss. So this is in case of a buy. This is what normally happens. If you want to buy precisely, wait for breaks above clear levels. Price breaks above a level, traces back to the same level, see a clear sign for buying, pick that trade, have your stop loss below the candle which trigger that breakout, hold on. Let us look at the case for a sell. I'm looking at this chart, assuming I have something like this. I have this here. Last line, we don't use it. Assuming you have a support, this level to be support 1.1121, then price comes from the top up to this point here, but does not clear break below it. First time price gets to a level, we actually don't know if this resistance as support or not, so price has to go back again. Then the second time we're now interested, begin to count this as a support. So we say, okay, previously the price was not able to go below this level, retraced back, came back to the same place, therefore this is also another support. So if price surely remains above this level, hold on, comes back, still holding on like this. So assuming when this is happening, that is when price is still being above this zone here, if it goes and breaks below 1.1122, if price moves down and even goes below this level, you should patiently wait for price to come back to the same place there, then pick a sell from this point. So you can never don't find yourself selling when the price is still retraced, or if price continues up, that is when price is somewhere here, it continues up, then you see a sell signal here. Not trade until the price is here. Remember, the same place which we were using previously for sells is the same place that is going to be used in the future for buys. And if you are looking for a buy, for the same place where we were using as sell places previously. So you should not find yourself in a case where you sell at a point where nothing significant has been happening previously. If you have a level, if you are seeing a sell signal here, assuming I was monitoring this chart, this is a real chart. Notice this is a breakout, that price opened here above and closed below. These are the tails. Somehow the price begins to move up, and while the price is here, it's not yet above around this level. That's when the price is here. I see a sell signal from this point. Drop a horizontal line at that point and confirm the past. See if there was a sign for a buy there. If nobody was buying at that point, there's no need for selling. You only sell where somebody has been doing something opposite. So if you have this one, assuming you have a level here, do not find yourself, if the level is here, don't find yourself trading here. Wait for price to come back up to this level here so that you're able to sell it at that point. So does it make sense? I hope this should make some very good sense, that we are not going to sell anything unless the price is here. Only sell when the price is around a level which was used previously as a good place. So if you cannot find this level, if you cannot find a level like this previously, you cannot find this, you cannot locate this here, and you cannot locate this one, do not find yourself selling even if the price is there, because you have to be supported by previous places. If we've not been using it before, we cannot use it in the future unless we start using it. So if you've not used this level, if you cannot trace the past, if you have a sell here, but from the past you cannot see any sign for a sell, do not sell anything. Instead, sit down, wait for price and retrace back up to this point here. Then pick a sell from that level, expect that sell to take us to the lower side. This is what we expect to happen. So this is one thing most people get wrong. You find yourself selling here just because price has gone below a level. It must not be like that. Price must retrace back to any level that's significant. Price tends to go back to it. So as I was saying, you must not find yourself selling when the price has not already reached this level. This is what breakout is all about. And one thing, this is 15 minutes I'm looking at. If you can get the same thing on a higher time, that's on the daily, weekly, or the monthly chart, and then you notice that on the, assuming this is monthly, this 15 minutes is actually monthly, assuming it is monthly chart, you've identified a level here, then you've seen price go below that level, then somehow the price retraces again back up to this level while you're seeing it. When price is here, when the price is here, don't sell just because the monthly chart is showing you a sell. Scale down to a 4-hour chart, daily chart, 15 minutes chart, 1 hour, and look for a similar breakout. Look for a formation like this, then pick a sell from that time frame. Have your stop loss correctly here or above, and hold on. That way you will have sold the monthly. You are actually holding on to a monthly trade, not only daily. not only 15 minutes chart. If you sell like this on a lesser time frame, while monthly was also around a sell place, actually pick the monthly trade correctly. This is one very good thing that most people ignore. There's a reason these time frames are like this. There's a reason we have 1 minute and up to monthly. Of them must correlate. They must be showing you the same thing to pick a trade. So when you have a sell in 15 minutes, but there's no sell on weekly, don't do anything. If you have a sell here, there's no sell here, there's no sign for a sell, there's no sign for a sell, not do anything. All of them at least must be showing you the same direction before you can pick a trade. So I want us to look at this from a real chart formation like this, PUSD, a monthly chart. So look at this here. Look at this level. Then also look at this. If we could find the past data, you'll actually see that this was a support up to 1970 something, up to 1990 something, 1970s, 1980. This was a very good support, and from what you can see, 2015 we had support, then there was a break, there's a retracement, there's a move down, there's a retracement. So how we have entered this trade is if you are trading a breakout. How could we trade this one? Can we enter this trade? Do we enter when the price is here, or do we enter when the price is here? In my experience, you need to enter when price is slightly above that zone, which means when price retraces back the first time, this is a sell, correct? Price goes down, it comes back, this is still a sell, goes down, it comes back, this is still a sell, goes down, then it comes back when the price is slightly above the zone where it's supposed to sell from. If the previous candles could not close above, what makes you think that this candle can close above? Now let's just, if this one could not close above, the other one could not close above, this one could not close above, even this one, what makes you think that this will close above? So when price is here and people are seeing possibilities for buying, that's the correct time to look for a sell from. This is according to real life experience. If you enter anywhere around this place here, actually find that the price goes your way before the week ends. That is almost instantly. If you enter in between from this point up to the high of this one, normally price tends to go your way instantly, and that's what you're supposed to look at cases where price moves that direction instantly. That's when you're supposed to enter trades. There's no point for holding on to a trade if that trade takes years to mature. There's no need. There's no, if it takes for like enter trade today, 2 weeks later you are still losing, 3 weeks later you are still losing, rather you could have waited instead of entering immediately. So if you have this something, a setup like this, you've seen this as a there's a retracement. Don't find yourself entering anywhere in between this point and this point. Instead, wait for price to try attempting to go above that zone. Pick a sell from that point. Expect that sell to take price massively to the lower side. The same way, let's look at this here. This one. This was a very good one. We had a support here. There's a support. There's a break. Then price came back the first time. It couldn't come back. So when the price is retracing back to the upper side, don't be in a rush to sell even if there's a sell signal. Wait for price around the same place that was used for an opposite trade previously. Does this make sense? I'll not sell anything when price breaks below a level. The first time it goes below that level, there's nothing to do. If it traces back but does not reach that level, I do nothing. If it continues down, I do nothing still. But if it comes back and even hit that level, then I look for a trade. Even better, if price attempts to break above that level, I'll pick that sell. So if price attempts to come back and even break above this level, that gives me the correct time to look for that sell. Let's look for another example. It's the JPY. So this is the trade we had previously. I'm still not going to delete it. I'll hold on. We'll hold it. Just look at this. At this here. This is not necessarily a very good one, but it looks it. If you understand exactly what I'm saying, you'll be able to see that it was a good entry. We had some level here as a support, and then we have this as a support. Then there's a break below. Price retraces back. So when the price is coming back up, do not enter anything. So when the price is retracing back after this breakout, when the price goes below a level, that is when the price goes below like this, don't find yourself entering a trade here just because the price has gone below that level. Instead, wait for retracement up to the same level where price was bouncing off from. Then pick a sell from within that zone. If you can do that, you'll be okay. So you'll be able to pick a sell from within that zone, hold it. When it comes back, you still have a sell. It goes down, comes back, you still have a sell. So we'll not find ourselves selling anything until when the price is here. When it goes below a level, wait for this retracement, and while the price is there, you're supposed to pick a sell. This gives you the very good entry. This is exactly where you're supposed to be entering. So if you are looking at, if this is a daily chart, but you're that person who trades 15 minutes, 5 minutes, look for those trades that have already matured on the daily or the weekly chart. Then start trading them in the direction of that day or the direction of that week. Able to pick very good trades. That makes some sense, that you don't just enter trades because there's a trade on the daily. You have to find the correct way, and the correct way is what I'm mentioning here, that look for a setup like this, as like a breakout that has happened on a higher time frame. Wait for price to retrace on that higher time frame. When you're just about to sell it on that higher time frame, scale down to a lesser time frame. That way, get the correct entry with very low stop loss and a very good take profit, which is set based on what's happening on the higher time frame. Is that correct? So that is simply how to enter trades correctly. Don't just enter trades because price has gone above or below level. Look for those trades that have already matured on a higher time frame. If price has already shown you a good trade, that is, if you have something, if you have a resistance like this daily, and price is already around that resistance on the daily chart, scale down to a lesser time frame. Put trades on that lesser time frame. That way, enter trades the direction of that day, have a very small stop loss, very good take profit. So thank you very much. That should be the end of today's market over in today's webinar. Before I proceed, I want to mention something again here. Look at this here. This is a weekly chart. We have a very good level here, very good support. So the question is, how will somebody be to buy it here? So the stop loss must be big. Buy it on the weekly when the price is here. It means your stop loss must be at least below this level here. It's very wide. How can you be able to buy it here and still have a very small stop loss? The secret is simple. When the price is here within this zone, scale down to a lesser time frame, maybe 15 minutes, 1 hour. Then look for a breakout around that lesser time frame. If you can see a breakout within that lesser time frame, check that as a buy. Look for breakout that shows you buy, especially when the price is here or price is just from that level. Hold on to the trade up to this level. Right. So thank you. That should bring us, that's the end of this webinar. Next week on